Hi, this is Zak Mir, editor of Spreadbet Magazine, with three oil stocks in focus at the moment. The first one is Gulfsands Petroleum, where there's been an extended base here either side of the 60 pence level since the end of July. Likely price channel floor here, level with the 50-day moving average at 59, and also an uptrend line in the RSI window based at 50, neutral 50, which is also backing the idea of a turnaround. As you can see, the low for the RSI was basically ahead of the recent recovery we've seen. In fact, last week's spike towards 70 looks like it's turning into a bull flag situation. So that we're mid-move in terms of the latest October rebound. The idea here is that while we stay above, say, 65, 66 pence, which was the old August resistance, there should be a new leg up over the next few days towards the 200-day moving average at 82 pence as a minimum target. Overall, actually, it looks like a very bullish situation anyway, in that on a 2 to 3 month time frame, we could hit the top of the May price channel at £1.10. So everything to play for there at Gulfsands Petroleum, and probably a lot to play for here at Rockhopper as well. Here we've also had a summer bear trap. We had a little bear trap here below £1.20, below the June support, and essentially once we recovered that £1.20 zone early in September, it's been a situation where you'd be looking for recovery. The false move here, or the false break through the 50-day moving average, just to shake people out. This was obviously too easy, this bear trap rebound. But since then, since we've been back above the 50-day line, things have gone from strength to strength. And the sign of the strength really is the way that we've actually broken through the 200-day moving average at one attempt. No need so far to test the 200-day line at 139 as new support. So looking very, very positive indeed. In terms of the upside here, wouldn't want to get too carried away, but actually it does look like a very positive situation. Price channel could be something along these lines. Floor of the channel at the 50-day moving average, and really the message at the moment is that once while we remain above the 200-day line, we could head towards 170, 180 at the top of a rising February price channel. So Rockhopper looks great, even though we are currently overbought. The message at the moment is probably that any weakness towards 140, the old August resistance, is a buy opportunity. And only really back below, 135 would really knock the sales out of this recovery situation. Finally, a situation which is not quite so glorious in its bullish credentials. In fact, we're looking the other way at the moment. We've got a sort of a wide falling trend channel on the Tullow oil daily chart. The channel's been in place since March, and it's been a sort of series of failures at or above £11, below the 200-day moving average at £11 and a penny, and below the March resistance line, or at the March resistance line at best. All the moving averages are currently falling, the 10, the 20 and the 50 shown in blue there, and it looks as though the best this stock can do really is to sort of bounce off a mid-channel line shown in red and then drift away again. So I think in this situation probably you'd risk, for the bears, risk no more than £10.35, the 50-day line, and be looking to sell into strength to take the shares back to, well, 950 would be the initial target, but in fact it looks as though here we could actually head towards £9 or even lower at the floor of the channel, and this channel can actually be deeper than I've indicated there. It could be down to £8. So really not a party here for the longs, and a sell into strength opportunity looks to be on the cards here. Just here we have this falling RSI support line, but below 50 you're very much in selling into strength territory, and we're already at 42 at the moment. So Tullow oil, not a happy situation, and there is the risk of further downside. That's it for me. See you next time.